The next big change I want to move on to is the marketable securities, which is the realized gain or loss on foreign exchange. For this, I'm going to use a separate file, and I'm going to use a very simple example just to demonstrate the functionality in the working paper and how it pulls through to the financial statements. So in my example file, I'm going to use journal entries to demonstrate the steps that I'm going through and then show you how it affects the working paper. So the year end for this file is December 31st, 2017. And my first entry is I'm going to transfer money into my US dollar brokerage account. So you will see that I credit my current bank account with $125 or $125, and I debit the US brokerage account with $125. So if I go to my marketable securities working paper, the first thing I'm going to do is under foreign exchange, I'm going to set it to yes. And where it says description of broker currency, it is set to US dollars, which is what I want, and my accounting currency, which is Canadian. The next area I'm going to go to is the average monthly exchange rates. And this table lets me enter the average monthly exchange rates for the two currencies. I know at the end of the year, my spot rate is going to be 1.25. So I simply enter that into the amount, into the cell. For January, my average monthly rate was 1.25. And for February, it was 1.1. Now the amount that I transferred in the first journal was $100 US, but because of the exchange rate 1.25, that is why I had the $125 going out from my bank account. So the first thing I'm going to do is I'm going to go to the interest earned on cash balances and cash transferred section. And for the first day of January, I'm simply going to put in the amount of $100. You'll see under Forex rate, it automatically pulls through the 1.25. Now what you will notice in the table directly above it called realized gain loss on foreign exchange, the $100 which I've put in was automatically populated into the table. So I have the 1st of January 2017. It is a transfer, the US amount of 100, the exchange of $25, and this gives me my 125 Canadian dollars. You'll see on the right, I also have a running total, which is 100 US and 125 Canadian. For my next transaction, what I'm going to do is on the 1st of February, I'm going to purchase 100 shares of Company A for $1 US each. The exchange rate on the 1st of February, as you can see, is 1.1. And this will give us a rise to a foreign exchange loss. So if I go back to my journals, I'm going to credit my brokerage account, the US, with $125. I bought 100 shares at 1.1, which gives me the 110, which is what I'm going to debit to my investments in marketable securities. And the difference between the 125 and the 110 gives me a loss of $15 because the Canadian dollar appreciated against the US dollar in that 1 month. If I go back to my working paper, I'm going to use Security 1 and name this Company A. I'm going to go to February 1st, and I purchased 100 shares at 100 US, and you'll see the rate of 1.1 automatically comes through. If I go to the summary at the top of the table, you'll now see that the purchases I've made during the year is 100 US and the Canadian equivalent of 110. The transfers I've made, which is 100 US, and at the time the Canadian equivalent of 125. And as we noted, we now have a realized loss of $15. Once again, if I go back to my realized gain loss table, as I showed you earlier, the transaction has been automatically populated from the security below. So on the 2nd of February, I purchased from company A $100. The current rate was 1.10. The Canadian amount was 125. And this gives me a loss of $15. Now the third entry, which I'm going to go to, is I'm going to sell some shares of this investment which I bought. So on the 1st of March 2017, I'm going to sell 60 shares at $2 each US. The current exchange rate is 1.1. And this gives me a rise of a marketable security gain of $54. So what I'm going to firstly credit my US account with 120 because the exchange rate is 1.1 and I have sold it for 1-0. The amount of shares I sold was 60, but the rate at which I bought them was 1.1 back in February. So the difference between the 120 and the 66 gives me a $54 gain on this transaction. So as you can see in March, my rate was 1. And I'm going to record this transaction in company A again. I sold 60 shares. I got $120 for them. And my rate was 1. If I once again go back to my realized gain loss table, you'll see that the transaction has automatically populated. So on the 1st of March 2017, I made a sale. The US amount was 120 and I got 120 Canadian. The fourth transaction, what I'm going to do is I am now going to calculate the gain or loss of my brokerage account at year end. So if you remember, I sold those shares for $120, meaning that I have $120 US in my brokerage account. And if you also remember, my year-end rate was 1.25. So if I take the 120 multiplied by 1.25, I get the Canadian equivalent of 150. And if I take this 150 and subtract it from the 120 US, this gives me an unrealized gain on Forex of $30. If I go back to my broker summary, you'll see at the bottom of the table, I have an unrealized gain at year end of $30, which is the difference between the 150 Canadian at year end and the 120 US at year end at a rate of 1.25. The last entry is to take into consideration the market value of the shares which I have remaining in company A at year end. So you remember I bought 100 shares, I sold 60 of them, and I still have 40 of them at $2 each. So this gives me a fair value of $80 US for the 40 shares that I own. Because I need to convert them to Canadian, I take that $80 and multiply it by the year-end rate of 1.25, which gives me 100. Now what I do with this 100 is I need to calculate the remaining 40 shares at the time of which I purchased. So I had 40 shares of $1 each, and at the time which I purchased them was 1.1, which gives me an amount of $44. So the difference between the $100 and the $44 of the remaining shares is $56. As you can see, all these transactions come through automatically to my realized gain loss table, and they will sort themselves automatically too. So that means if I buy shares in another company and I do transactions in between the time I bought and sold shares in company A, these will automatically rearrange themselves in the table and take into consideration any cash balances I have in my brokerage account. What I'm just going to quickly do is I'm also going to jump to the income statement of this example just to show you the various gains and losses which I've been referring to. So under the revenue section, we have the gain of marketable securities of $54. We have the loss on foreign exchange of $15. We have the unrealized gain on marketable securities of 56, and we have the unrealized gain on foreign exchange of 30. And these are the four major things which we will take into account when calculating the gains or losses on foreign exchange.